In this video, I'll be showcasing my first ever payout made in prop firm trading and the step-by-step guide on the system I followed to achieve this goal. Now this video will be broken down into 3 key parts. The first part will showcase my payout proof with FTMO. Second part, I will demonstrate one specific setup that you can implement to achieve your first payout. And the third and final part will include the criteria checklist in which you will need to follow in order to successfully pass any prop firm challenge and get payouts. Now I take these setups daily in my Discord channel, so if that's something you're interested in, I will leave a link below on how you can access the channel. But without further ado, let's just get straight into it. So first things first, you can see my account metrics right here. You can see that I got my 100k funded account on the 12th of December and I traded it until the 1st of January 2024. So roughly around 2 weeks of trading. You can see that I took around 12 trades max and the total profit was $2,411.26. Now obviously it went into profit, came back to break even, but then the next few trades brought us back up into profit. I think the most important thing when you get your first funded account is to actually get that first payout. So if that even means just making like $100-200 of profit, just look to end the month in profit. And the reason being is because when you get your first payout, you actually get a refund on the actual purchase you made on the challenge. So obviously you want to make sure you end the month in profit. So that's what I look to do. I'd say 2.4k in 2 weeks is actually really good. You can see on the side here the reward ratio is at 80-20, and now obviously I can't click on it at the moment because it's not going to show me, but my payout was probably around like 1.9, which is around 80% of this whole profit. You can see that my trade score was around 62%. I mean, the reason is that low is because I only took 12 trades. Max daily loss limit 1.3k, so I was down 1.3% in a day. I basically was at break even with a max loss and the profit was 2.4. The refund was fully processed and the payout was sent to you on the 3rd of Jan, which it was, and I'll be showing that as well in this video. So I will bring up my payout certificate. You can see that it's all verified, it's all there, it's legit. So what I'll be doing now is I'll be moving over to TradingView and I'll be showcasing one specific setup that you can use to actually get a payout like this or to pass your funding challenge. So let's just get straight into it. Okay, so now that we're on TradingView, I want to basically showcase to you one specific setup that I've been using consistently to actually make those type of profits and to pass the challenge. So this setup I literally take almost every day if the opportunity arises. So all that this setup follows is a liquidity sweep, a market structure shift or a break of structure to the opposite direction, and an imbalance entry for continuation for the rest of the session. So let me give you an example of what I mean. You can see here that this is gold. So this is the gold chart. I normally do trade gold, but I also focus on other asset classes as well. But you can see that during the Asian session, London session in the light blue, and the NY Open in the light green, you can see that we're clearly just ranging. In order for us to actually look at a potential setup, you need to identify the daily low and the daily high. So you can consider this to be the daily high right up here in Asian, and you can consider the London low to be our daily low. So think about this whole area, this whole consolidation area, as one massive range. Now in order for us to actually find volume and momentum in the market, we need liquidity sweeps, either from the highs or the lows. Looking at this chart right here, I can't take a sell or a buy here because we can just consolidate, we can just either go back up, come back down, and we can just keep doing that for the rest of the session. We could get a sweep of the daily low, either acting as if we're continuing bearish, massive push up bullish, retracement, consolidation, and then trend continuation. So you can consider this to be the manipulation. We push back up, accumulation right here, and distribution for the rest of the session. Now we could do the same thing with the highs as well. So we can push up, we then get towards the daily high, we begin to consolidate, see a market structure shift right here, one more spike up, and then bearish for the rest of the session. So these are 2 main scenarios that we can look at, and considering that we're just in this massive range, you can anticipate that price is going to create a liquidity sweep. So just watching the chart, you can see here that we actually grabbed liquidity from this low right here. So you can consider this as a liquidity sweep because we swept that daily low and we had a nice bullish reaction candle. And as this is, as I'm looking at this on the 5 minute, when you see something like this forming, you want to go down to the lower time frames. So we go down to the 1 minute time frame. Okay, right off the bat with the bullish reaction, what do we see? We see a clear market structure shift with a candle closure above the previous high. So the previous lower high, what you want to consider, looking at this on the lower time frame, we have a lower high, lower low, lower high, lower low, another lower high, and another lower low. So this is what essentially we're seeing from these candlesticks right here. Now when we get a liquidity sweep and a run up, we normally tend to see consolidation before a reversal, and in this case you can consider this to become a market structure shift because we switch from bearish lows, lower lows, into a bullish reaction and creating a higher high. Okay, so knowing this, you can expect that there is a potential buy setup forming right here. Now you can't just take the buy here because where you're going to put your stop loss, you can't put it below here because it just wouldn't be a very good risk to reward or a good outcome for the trade. So you want the pullback to occur. Judging by these two candles right here, we got one imbalance entry, and depending on how this next candle opens up on the 1 minute right here, you can see we respected this imbalance entry. So we've come down, we rejected it very nicely. So when you have these levels marked up, or you have your analysis marked up, you want to look very closely at how price reacts to your key level. So in this case, my key level is this imbalance entry area, and we've come down and we rejected very nicely. So this is telling me that this is a great opportunity to take a buy if price comes back down into this entry point, imbalance entry zone, with a short-term target of the NY open high, because remember I mentioned that this light green box is the NY open. You can see right here 1 p.m. So think about it logically. Remember what I said. We look for a liquidity sweep, a market structure shift, imbalance entry where price is respecting it. Not, you know, you can place a buy limit there, but to be more confident in the setup, you want to look at how the candlesticks react to that zone. And in this case, we've rejected very well. So now you can place a buy limit, stop loss right below the zone, so below the previous 1 minute candle, and targets above the highs right here. And let's just see how this plays out. And then you can see we've hit take profit and the trade played out perfectly. So remember, this can be taken for either buys or sells. So if you're looking at sells, you kind of want to just see the opposite of what happened here. You want to see the highs being swept, market structure shift, and then imbalance entry to continue down. Now, if you can identify these setups that probably happen once or twice, maybe even 3 times in a week, then that's all you need to become profitable and to get payouts. So now that you guys know what setup to look for, I'm going to give you the criteria checklist that you need to actually follow in order for you to actually pass these challenges and get payouts consistently. So let's move over to that now. Okay, so now we've come to the final part of this video, and this is going to be the criteria checklist that you need to follow along with the setups that I showed you for you to actually pass phase 1, phase 2 and get the payouts. Now let's head over to the risk management part first. So the first thing that I would suggest is to risk 1% per trade with a 1 to 2R TP average. Now I say TP average because you're not always going to get a 1 to 2R setup. Some trades might be a 1 to 1.8, 1.5, 1.7, could even be more than 2R. Ideally you're looking at that range of 1 to 2R where you're risking 1% to make 2, and you're essentially trying to double your money off one trade. I would suggest to increase your risk to 2%. And the reason I say that is because if you take one winning trade, let's just say you're at break even, you take one trade at 1% risk and you hit a 2R, meaning you've made 2% profit, your next trade you can risk 2%. And if that trade plays out, instead of making 2% profit, you're going to make 4% because you risk 2% on this next trade. And that will really accelerate the process of getting funded and passing phase 1 and phase 2. And you should do this consistently. Let's just say, for example, you risk 1%. Okay, let's just say, for example, you risk 2%, okay, and you lost the trade. So it was a losing trade. You're then back at break even. So there's no harm. You then go back to this stage here stage 1 where you risk 1% for a 1 to 2R, and you repeat the process, get to 2% profit, then increase your risk to 2% per trade, and then keep doing that up until you pass the challenge. Now, if you do get in drawdown, I would personally suggest don't reduce the risk. Stick to 1% regardless. So even if you're down 2, 3, 4, 5%, I would still recommend sticking to 1%. And the reason being is because knowing that this system works in the long term, and if you can actually follow it religiously, it can perform very, very well. There should be no reason for you to reduce risk, because then you're not really benefiting from holding that account or holding that challenge for any longer. Remember, you want to pass the challenges as quick as possible. So even if you're in 5-6% of drawdown, and let's just say you take the next trade and it's a winner, you can go from 6% drawdown to 4%. And then if you start hitting a run, then it will only take 2-3 for you to actually get back to break even. So remember, just follow this process. Take a screenshot of it, write it down. It's essential for you to actually follow this step by step. Now, when it comes to daily trade limits, I would suggest 2 trades a day. If you get 1 winning setup, you call it a day. If you take 2 losses, you call it a day. And the reason I say that is because of the 1 to 2R TP average. Now, if you get 1 winning setup, let's just say you're up 1.5% or 2% on the day, there should be no reason for you to look at more opportunities. You can come back the next day, refresh, and just repeat the process again. And if you can take 2 losses, let's just say you take 1 winning setup, that's 2%. The next day, you take 2 trades, they're both losers, you're not really at a loss, you're just at break even overall within those 2 days. And that stops you from getting into significant drawdown, okay? Because I know when you get into drawdown, you look to take more trades, you look for more aggressive entries, but remember, all you have to do is follow the setup and follow the checklist. This is the checklist. The setup I just showed you previously, that's all you need. So when it comes to timing, this would be the 1 p.m, the 1:30 p.m, and 2:30 p.m. This should be the only time where you're looking for an actual setup to form, because this is where volume actually comes into the market. Notice how I haven't included the London session, because I personally see that London session tends to be the accumulation phase of the whole daily candle, from my experience. So I just avoid trading London session in general most days. But the New York Open up until the NYSE, the New York Stock Exchange, this is where all the liquidity comes in. Large amounts of trading volume kicks into the market, especially if there's a news release like CPI and unemployment claims. So that's essentially it. That's all you need to know. You need to follow the setup, you need to follow this criteria checklist, and you should also look to join my Discord, because I actually take these setups almost daily, and you can get a glimpse of how I trade, what type of setups I'm taking, and you can essentially just learn and develop your skills from there. So I'll leave a link below on how you can join that, and that's essentially it. That's all you need to know. So I hope this video has helped. If you feel like you've gained some knowledge from this video, please leave a like, leave a comment, let me know what you think, and I'll see you guys in the next video.